All right, players. I've done Ford. I've done GM. Now it's time to tackle the king, the big T, another American car manufacturer named Tesla. So, this is not going to be like one of these product review videos or, um, you know, production line shortages and whatever squeezes type of analysis here. It's not going to be like, oh, when is it going to get 100 million, billion, triple trillion revenue? It's going to be an analysis on the numbers. I'm going to try to determine the health of the company based on the numbers using data from stockanalysis.com and directly from the 10K of the company. And we're going to try to figure out and answer the question, is this company a good buy here? And is it resilient enough to withstand a downturn in the economy? So for determining this, I'm going to be using some data from stockanalysis.com. This is better viewed on a desktop. On a phone, you might be able to see what's going on. So I apologize for all you phone users. But we're going to start with valuation. Guys, the first thing that pops up right here is the market cap of the company. That is literally the price of the company. Currently, it's sitting over half $1 trillion at $583.81 billion. Recent price action today was down 0.3%. On the 5 days, down 7.7%. 1 month up over 10%. Year to date up 55%. Woo, big rebound. 1 year down 44%. 5 year up 821%. Since inception, 14,466%. Now, the next thing I'm going to dive into first in a shallow way is the income statements. So I'm going to put it on quarterly so I can get a little bit more definition into the numbers, and let's explore. Oh, by the way, if you've noticed, there hasn't been any edits, cuts, or anything like that. It's not like that. Okay, this is a conversation. It's a person-to-person conversation. So, it's kind of like talking to me. And when you talk to someone, they stumble, they say they say other words. So we're just going to have to get used to it, okay? Revenue. Major exponential growth. Now, up until 2019, I want to say this, all right? Up until 2019, I actually had, I've always had a no love, no hate relationship with Tesla, completely neutral. Before, I used to think that their products were cool and that the company was crap. And 2019, I kind of turned. It reversed for me, and it's been true ever since. I think the products are crap and the company's good. So the company actually made big strides. And my opinion on the products, by the way, it's very subjective. So it doesn't really matter. To me, I've driven electric cars. I've driven different models of Teslas personally. And to me, they just feel like very powerful golf carts with blinkers and an iPad. And that's literally what it feels like to me. It's not exciting at all. I know some non-car people are very excited about Teslas, and that's fine. I'm not gonna hate on you, but just personally for me, they don't do anything for me. I would not buy a Tesla. But that's besides the point. It doesn't matter what I think. It matters what people want around the world, and they seem to be picking up these Teslas like hotcakes, and so the company's doing great. And so here we go. It's proven by the revenue. Look at this exponential growth upwards. Finishing the last quarter with the highest revenue ever at $24.32 billion in revenue. Okay, cost of revenue, I'm going to start looking at that as $18.54 billion. The next line I'd like to go into is net income, which is sitting at $3.7 billion for the latest quarter. Annualized, that's like what, $15-16 billion there, perhaps, on the optimistically. That's pretty good. That's not bad. So the growth is really good. They've had profitable quarters ever since 2020, mid 2020. A lot of profitable quarters in a row. So kudos to them. Great job, Tesla. Shares outstanding. They do dilute the shares, keep in mind. However, the value of the company is growing faster than the dilution of the shares. So we shouldn't complain that much about it, right? Other lines I like to look at here is the margins. So gross margin sitting at 23.76 for the latest quarter. Operating margin one level down, 16. And then the profit margin is the one that's, in my opinion, the most important one. And that's sitting at 15.16 at the moment. That's not bad. So when I was reading through their 10K, they're trying to achieve greater profit margins through volume, basically. So the strategy is volume at the moment. They are doing very well expanding the volume. They still have a lot of catch up to go before they reach other automakers around the world. They're not even in the top 10 at the moment, but they're definitely making strides and they're trying to get up there. So there are, by the way, other electric vehicle makers that are accelerating their sales even faster than Tesla. One of them, or the only one, is BYD. So check that one out. I wouldn't invest in it because I've gotten burned way too many times investing in foreign companies outside the US. But if I were to do it, I would have to do it small size. But let's just stay on topic here, okay? Sorry about that. Getting distracted. Let's go into the statistics real quick. What you'll see here is the difference between the market cap and enterprise value is positive, meaning that they're actually holding some cash. Now, this is really impressive, okay? Let's go to the balance sheet, and you'll see that net cash is $19 billion. This is really impressive because if I compare it to the other automakers that I reviewed previously, GM and Ford, those guys have a bunch of financing wings. They're trying to get into banking for their own products, finance their companies and dealerships and whatnot and all that stuff. And it's just, they end up having a lot of assets, but also a lot of liabilities, and they cancel each other out. And it just carries a lot of risk associated with this, with their business, with the cyclicality of their business. And I was not a fan. I am not a fan currently of this kind of relationship. Tesla, on the other hand, does not have such foolery going on. And so I appreciate that. They're actually carrying cash on their balance sheet. Can you believe this? So they have $19. $19. Can't even buy lunch with $19 nowadays. $19 billion, excuse me for that, in cash. So that's really impressive here. Let's break that down a little bit. We'll go to the financials, balance sheet, quarterly again. Cash and cash equivalents right here. Well, actually, let's go to this one. 22.19 because it includes short-term investments, I guess. Yeah. I don't know how they got to that 19 billion then. But whatever. Oh, they subtracted it. My bad. So minus 3 billion of debt, that makes more sense. That's how you get 19. Okay, so other figures here that we need to go over is actually from the 10K. So I think it's time. I think it's time we dive in there. But before we do, okay, we're going to try to figure out some growth rates. So over here, you'll notice I've opened up the 10K now. This is a 2022 one. You'll notice growth rates. If you're on a desktop, you may be able to read it. But everything in their business, besides their automotive regulatory credits, those are phasing out anyways, right? And it's a small part of their company. Everything else is growing over 50%, guys. That's really good. You know, energy generation and storage segment is growing at 40%, but everything else, automotive related, over 50%. Okay? That's nuts. Especially coming from a pretty large size, right? So we got automotive sales, 2021, it was 44 billion, 2022, 67 billion. Okay? That's where most of the revenue is coming from. A small portion is coming from regulatory credits and automotive leasing, about 3 billion. And then a pretty good portion, but not not overtaking sales is services and other. This is like, when you take your Tesla into their shop, you have to fix it or whatever, or you buy some kind of self-driving package or something like that. I don't know what else goes in there, but that's 6 billion. So compared to 67 billion in sales. And the other one, of course, is the energy generation and storage segment revenue, which is 4 billion now. It's increasing pretty good. I mean, I like this. This is probably my favorite part of Tesla, is this energy generation and storage unit. I don't know what they're priced at. I may get a Tesla roof or a Tesla wall or something like that, because I'm a fan of those kind of products. I haven't decided if I'm going to do that. I'm going to have to look at the pricing. Haven't really done it yet, but I know that they're on the website and they're selling, so who knows. Okay, so growth rate's pretty good. It's still growing very, very fast. And I don't know if it's going to grow into its final valuation. We're going to come back to that $500 billion valuation in a little bit. But first, we're going to look at some assets and liabilities to figure out the resiliency of this company. All right. So first of all, a lot of the assets are in a pretty good mix. They're not overweight anything. You'll see that they have, cash and cash equivalents, account receivables, etc. Their inventory is about, $13 billion, which is, and in Ford, it was like 14, and GM was like 15 billion in inventory. So not bad. I guess they still have some cars to sell or something. So the other big item here, the other big ticket item, is property, plant, and equipment. They do have a lot of like gigafactories, right? They're either in production or already finished. So there's $23 billion in that alone, which is the chunk of their non-current assets. So total assets here, 82 billion. Okay, I'm gonna skip through the liabilities for the most part. They don't have a lot of debt. They only have like $3 billion in debt or something like that, and it gets covered by their cash anyway. So they do have normal operating liabilities, and those total 36 billion. So the difference is stockholders' equity, right? So stockholder equity, plus liabilities equals assets, and that's 44 billion. So in GM's case, all right, 44 billion. In GM's case, this is interesting, and in Ford's case, the stockholder equity was basically almost equal to the valuation of the company itself. So the company is trading basically based on its asset value. Now, Tesla is not. Okay, stockholders' equity is only 44 billion. The company is trading at $500 billion, more than $500 billion. So, what investors are saying, okay? Investors are saying that the option of Elon Musk or the growth of Tesla, all of the above, or all the companies that it could spawn from within itself, or buy out and develop, acquire, etc., is worth more than 10 times the current price of the company. So keep that in mind, right? That's a very expensive option that you're paying for here. And for how many years you're going to hold it, So the valuations, we're getting a little sketchy here. That's a very expensive option. Now here's another way to think of it, right? So $600 billion, almost, you can fit in 11 GMs and Fords in there. So GM and Ford each are worth about $50 billion, and they're trading basically at their, asset minus liability value. You can buy a GM, a Ford, both of them, you can buy them. You can buy another GM, you can buy another Ford, 4 companies, You can buy another GM, another Ford, another GM, another Ford, another GM, and another Ford, and then another GM. About like 11 or 12 of them. Okay? 11 or 12. And Ford just paid a 65-cent dividend. So you can buy that many car companies that are pretty large, actually. Both Ford and GM sell way more vehicles per year as a company than Tesla currently. I'm not saying they won't get surpassed or whatever, and of course their margins are lower, etc. Blah blah blah. But just keep that in mind, right? Both of these companies individually sell more cars than Tesla, and you could buy 11 of them. So just valuation metrics, right? Like keep that in mind. So an option worth $500 billion you're paying for, and for the same price you can get 11 GMs and Fords. I mean, I don't even know what to say at this point. Is the company going to survive a downturn? Yes. Is it resilient? Yes. Is it growing? Yes. It's very good. Is it have like exponential growth close to it? Is it going to start tapering off? Probably. I don't know when. Some companies taper off earlier than not. I heard that Tesla is still trying to expand in countries like China, which is a lot of people are giving them a lot of flack for that because of tensions, political tensions, etc. I don't necessarily think it's a bad move. It's a risk. If conditions improve, they're going to vastly benefit from that. And plus, they're probably going to get the favor of the Chinese government because they keep investing in the countries when some companies are pulling out slowly or fastly. It could pay off for them. Might not be a bad move. Even though U.S. media is throwing dirt on them right now, could be actually a very good move in the long term, especially considering that China is still the most populous country in the world, and it's very close to India, which is like the second most populous. They're about even, I guess, pretty soon. So it's resilient, it's profitable, it's growing. Yes, we just don't know when. But is it priced well on the market? I don't know. I mean, that's the most expensive option I've ever heard of, a $500 billion option. So personally, would I do it? No. But if you think that, the guys have figured it out and they have the competitive advantage and the edge that will last for years, and no car automaker will be able to chase these margins, these 15% margins that they seem to be getting consistently now, then sure, go for it. I mean, at least this company is generating cash and it's not losing money like half the car companies out there. And it seems like the demand is not capped yet. It seems like it's not capped. I would have thought that the legacy car companies would actually be a bit more competitive, and perhaps they will be in the future. But as of now, when it comes to the electric vehicles, I guess Tesla is still dominating. So, 11 companies, guys. 11 GMs and Fords. Which one would you rather own? Those or Tesla? I don't know. You tell me. That's it. Mic drop.